Less than a month ago, the federal and provincial governments announced they were helping Linamar, the auto parts manufacturer in Guelph, to create 1,200 good-paying jobs by offering the company a $100 million subsidy. Was that a good idea? Would the company have created the jobs anyway without the subsidy? Or are we in a new reality where governments simply have to do this to stay ahead of other jurisdictions? Joining us now for more on the deal and who benefits most. In the nation's capital, Céline Bach. She is president at Analytica Advisors. And with us here in studio, Finn Poshman, Vice President of Policy Analysis at the C.D. Howe Institute. And I'm happy to welcome both of our guests back to the program here tonight. Finn, for starters, I want to go to you because there are two halves, if you like, of this Linamar deal, the federal contribution, the provincial contribution. Put some meat on the bone. What are they doing?
It's about as simple as it gets. The provincial government is kicking in just over $50 million towards a grant program for Linamar, and the federal government is kicking in just over $50 million for the same program. It's aimed to support and encourage Linamar in developing a transmission line, and as you said, Steve, the goal is to create or support roughly 1,200 jobs in Ontario.
And when you say grant, the two governments are giving this money to Linamar. This isn't a loan. This isn't you do this and we'll do that. This is a grant.
It is a grant. There are always terms that surround a grant, but it's a grant.
Okay. Céline, in your view, is this a good deal for taxpayers in Ontario?
Well, I think it depends. I think it depends on whether Ontario is an investor or simply a funder in this case. For example, the U.S. government made a $450 million loan to Tesla Ventures when it was originally started up. And as you know, that is now quite an important going concern, and all of those funds have been repaid. As I understand, half of this arrangement with Linamar is to be repaid, and the other half is subject to conditions that have to do with how the jobs evolve over time. I think it's also important to note that in Ontario, this will probably be one of the most significant investments in new transmission technology with a focus on moving towards electric vehicles. And so that actually is important as we move towards decarbonizing the transportation system in Canada and around the world.
And Céline, let me follow with this. I know every time the Ontario government has given a subsidy of some kind to some profitable corporation in Ontario, there are lots of people who are asking themselves, why are we doing this? But just to be clear, if the 1,200 jobs don't materialize, the money to the company doesn't flow. Isn't that right?
Well, typically in a grant arrangement, there are contribution conditions for a contribution agreement. And so the province has basically engaged itself in following the evolution of this program and in meting out the money as and when the milestones for the program are achieved. I think this is part of sort of a new way of thinking about how firms operate and how governments engage with them, and moving towards more of an investor-based mindset away from simply writing checks.
And Finn, what do you think of this new way of doing business?
Well, the good side of it is that it's directly aimed, or more directly aimed, at lowering the cost of capital for the business and doing so over time. As Céline said, there are milestones, and that encourages a little more accountability in the overall program. It does pose a tough question, though, and it's one that governments always face. Losers are really good at picking governments. Governments aren't so good at picking winners, right? And
you just come up with that? That's not bad. That's not bad.
I borrowed it.
Okay.
Now, and this one's a little different. Hands down, Linamar is a well-run company. It's a profitable company. It's been growing over time, and if you look at some basic stock market indicators, look, it's cruising near its all-time high, and that's a powerful message of support for a profitable, well-run company.
So, should the government not be offering subsidies to profitable, well-run companies?
That is a different question, and for taxpayers, for people who are going to at the end of the day fund the program either through paying down government debt in future years or higher taxes now, why they're giving money to government or to businesses that don't obviously need it is going to be a really big question in their minds. The upside, as I hinted at, is better to give it to someone who's running a good company than a bad one.
Well, I don't want to pick on not that I am picking on Linamar, but we should not appear to be picking on Linamar. Ubisoft is a profitable video manufacturer. The Ontario government gave them I think a $250 million subsidy several years ago. You know, there are plenty of other companies. Cisco got a huge subsidy from the Ontario government as well. Is this, Céline, the world in which we now live, in which you got to pay to play, and if you don't pay, they're going to go somewhere else?
Well, I think we're, as you allude to, we're living in a period of transition where you know, economies are increasingly tied to one another, where globalization makes it possible to have different parts of the value chain reside in different parts of the world. I'll give you an example. We just did some quick fact checking on Canada's global market share for the aerospace industry. And, you know, it's declined from 2005 to 2014 from 7% of the global market share to 5.5% of the global market share. So, you know, we are all under pressure, and we need to understand what it takes to to convert that $1 billion a year in aerospace R&D investment that we make, which is, you know, by the by, very similar to the investment we make in our clean technology industry through R&D, and understand how actually do we make globally competitive products or components that, you know, find export markets at the right price. And I think it's important to note that this is a brand new field. You know, there are not that many economists who are looking at the field of, you know, firm level microeconomics and trying to understand, you know, how does all this play out? How do we understand the sort of the new world in terms of how companies operate, both big and small, that are very focused on international markets and exports?
Finn?
Oh, Céline raises some great points. It is hard to know where to start. I'll start by saying one more good thing about the Linamar program, which is that if the job numbers hold out, we're looking at something like $87,000, $88,000 a job. And that's a lot of money, but it's a lot less money than the Ontario government is spending on many of its other programs, so that are often in the $100,000, $170,000, $180,000 per job range, and that's if you believe the job numbers.
So is that to say the bang for the buck is not quite as good in this case?
Always better in the sense that if the job numbers hold up, we've bought them, so to speak, at a lower price than many other programs from the point of view of the Ontario and federal government. Now, whether that's a net winner all around is yet another question. It's very difficult to show that these subsidies produce net benefits, and if they do, to whom? It's very difficult to show that jobs were created or preserved, because you don't get to see what didn't happen otherwise. And then there's a question of where the subsidies should come from. One of the best microeconomic studies that went down and looked at firm level looked at counties in the U.S., county by county, where the counties bid for large plants in excess of $1 million. And they found that it pretty much came to a wash. A lot of economists would assume that it's a loss, but the benefits roughly equaled the costs, and the benefits went to homeowners because jobs were created, jobs stayed, property values went up. So homeowners won, and the city's got a little more property tax revenue.
But essentially, I think if I'm hearing you correctly, at the end of the day, these are political as opposed to economic decisions that are being made. Is that fair to say?
Oh, absolutely. And when you talk to the political leadership of whatever party, whatever jurisdiction, if you're talking about subsidies for auto, subsidies for aerospace, and this is where this always comes up, they will say this is a global business, and if you want to play, you have to pay. And the economic analysis really tends to stop about there.
Sheldon, bring this next graphic up if you would. Here's Ian Howcroft, the Ontario Vice President of the Canadian Manufacturers and Exporters, said that energy is a major factor when companies look to invest or expand in the province. It is a major concern we hear about from our members on an ongoing basis, Howcroft said. If we want to be globally competitive, we have to address the cost concerns in a variety of areas, but particularly in energy. Céline, let me go to you first on this one. Is it possible that while much of us are focusing on competitive tax rates, or how much subsidy are you going to give my company, or that kind of thing, we're not paying as much attention to the price of power, which we should be more focused on. Is that fair?
Well, I mean, I think we need to make a few just baseline statements in this regard. I mean, you know, across North America, we have governments making commitments to decrease the carbon emissions that result from the electricity sector. So The province of Ontario has made that decision, and many other jurisdictions are doing the same thing. And so, let's just put that out there. At the same time, the energy-intensive sectors, like, for example, the petrochemical industry, which is, quite concentrated in the Sarnia area, there are other input costs that are as significant, and in some cases more significant than energy. So, for example, in polyethylene plants, it has become just as important, if not more important, to have access to natural gas as it is to have lower costs of electricity. And for example, there are large companies that are in the Sarnia area that have benefited from the pipeline infrastructure in Ontario and the access to natural gas, and have made significant investments. So I think we need to be, we need to look at the whole picture. There are major inputs into large energy-intensive systems that are not electricity, and we do need to bear in mind that there may be over time border tax adjustments and other sort of barriers for our industries if we don't pay attention to the carbon content of our electricity sector. Having said that, we can't afford to have it be overly expensive, right? Sure.
So, Finn, can you rank for us, if you're a corporate executive and you want to set up a plant in the province of Ontario, tax rates, whether I can get a subsidy from the government, price of power, how would you rank them?
Oh, well, first, proximity to markets and a business plan that goes with it. Then you turn around to look at human capital. What else can you bring to it? Can you hire people, skills, the things you need to build and produce? After that, you're going to look at things like other input costs, of which you will regard taxes as one of them. Taxes you can think of as a cost of capital in particular.
Price of electricity?
Price of electricity is a cost of an input. And Céline made a great point that, say, in the petrochemical sector, others where natural gas is an important input, fertilizer jumps out as another one where your primary energy source is natural gas. These groups do well in the current energy price environment. The rest of us, manufacturing in particular, and of course the entire retail side and commercial side in Ontario, are suffering from decisions made a number of years ago in Ontario that have brought us a delivered price of electricity that is grossly higher than the open market price at which we can buy electricity today.
Well, I want to go to Céline on that because, Céline, I must confess, I get a lot of emails from people saying the electricity prices that we are paying in the province of Ontario are abnormally high because of, for example, the cost of implementing the Green Energy Act, where power can be purchased, for example, on the open market at 4 or 5 cents a kilowatt hour. I know they're not paying this anymore, but once upon a time they were paying people 80 cents a kilowatt hour to produce solar power. How much of the price of what we're paying today is in order to produce greener power, if you like?
Well, I think it's important to note a couple of things. One is that the price of electricity was stalled or held or capped for almost a decade, and that was a policy decision that I guess was a result of some political pressure. And so infrastructure investments like transmission lines, distribution lines, et cetera, they're simply not made. So when we talk about the price of electricity in Ontario, yes, the Green Energy Act has contributed to part of the increase in the cost of electricity. So have other factors, including the distribution costs, the fact that we have many local distribution companies. There are significant opportunities for economies of scale there.
Canceling gas plants.
And there will be transmission investments as well.
Canceling gas plants. That costs, right?
Yes, absolutely. That costs money.
Yeah.
Céline's got part of the story. There's a lot more to it, though, and transmission costs certainly go to how much it takes to get it to your house or get it to your business. But there are a lot of things going on upstream in the contracting process. So we looked at just the green energy portion of the Green Energy Act back in 2011 and came to an estimate that we were looking at between $300 and $400 per Ontario household per year for the green energy component.
Just for the green energy component.
So another way to get at that, so you look at 2014. what we call the global adjustment that adds to the market price, all the green energy, the conservation, other related programs, and the long-term contracts. So the power production arrangements and non-utility gas generator contracts. These are long-term contracts that guarantee prices to the generators. So you lump all that together, and that for 2014 is $7 billion. So that's about $1,400 per Ontario household per year in the cost of long-term contracting and in the cost of the green energy programs.
Let me ask you the flip side of the question, which is how much less are we going to spend in healthcare on kids who've got asthma and other respiratory illnesses because we've no longer got coal-fired generating stations belching pollution into the air?
Oh, oddly enough, we're going to survive that quite nicely owing to the collapse in demand for other sources and the fact that we have very, very capable hydro and nuclear capacity in Ontario. The proportion being kicked in by solar and wind is, it's coming up a little bit year over year. The thing is, it mostly produces it when we don't need it in an exorbitant rate. So the cost per ton of greenhouse gases or saved from emission is extraordinarily high. And you could do much better just by writing better contracts for your gas generators.
Well, Celine, let me get you to react to the other thing I get emails about all the time as well, which is why are we producing all this power at this much expense and then giving away much of it to other jurisdictions, say in the United States, because we've produced excess capacity?
Let me first say, Finn, you didn't mention the fact there has actually been an estimate of the internalized cost of healthcare due to the closing down of the coal power plants in Ontario in the range of 5 to 10 cents a kilowatt hour. In terms of the sort of time of day in which various kinds of electricity are produced, including renewable energy, I think there's a terrific opportunity that's currently being prosecuted by the premiers of Ontario and Quebec, and that is to take the benefit of the fact that Quebec and Ontario have peak demands at different times of day, and also that Quebec has the capacity to store electricity and sell it into the U.S. market, when the market commands a very good price. We've been talking about the need to integrate the Canadian energy system on an east-west basis for many, many years. It's time that we do that, and I see this as a fantastic opportunity for our pension funds, the OMERS and teachers and La Caisse de dépôt, to work together on investing in infrastructure for a lower carbon economy and for the benefit of both Ontario and Quebec and for Canada overall.
But let me follow up. How big a deal do you think it is that we seem to be selling at a loss so much of the excess power that we produce in this province?
It is a big deal, but by having transmission links between Ontario and Quebec, we would no longer need to do that.
Well, that's part of it. There's one other thing that has to happen first. And again, Celine is bang on. We could run this all a lot better if we had better interties between Ontario and Quebec and Newfoundland and managed all of the interprovincial flows better. We just don't have it. But first things first, we're selling excess electricity mostly overnight to the U.S. at extremely low and occasionally, sadly too occasionally, at negative prices. In other words, paying people to take the electricity. There's only one reason we do that, and that's because of the existence of the long-term contracts, which mean that we have to pay the non-utility generators, whether we need their electricity or not, at a fixed rate. And
we can't store it.
And we can't store it. And the wind output tends to be pretty good at night too. So you're getting a lot of your wind when you don't need it. We have take-or-pay contracts for a lot of the wind generators, and these are rather impressively designed creatures for losing money.
So, Celine, going forward, we've got about a minute left here for our discussion. What would you like to see the power mix look like in the province of Ontario?
Well, I think we need to be prudent. As Finn has alluded to, we can't have contracts that provide feed-in tariffs that are in excess of the cost that provide excessive profits. And I think prudence is always important. At the same time, we do need to continue to decarbonize our electricity system, and I think we need to start integrating the supply side with the demand side. And as we move towards electrification of our large transportation infrastructure, we're going to start to see a demand increase for the first time in many years in Ontario, and that should be considered in a very transparent way as an opportunity for us to to use to take the benefit of some of these sources of power that we've contracted for over the last few years.
Finn, last 30 to you. Would you agree we have to decarbonize the way we create power in this province?
Well, the nice way to do it is to set a target and to let the market figure out how to meet it. So one, yeah, hydro deals, as we talked about, is part of it. Another, ditch the subsidies and let the market figure out how to deliver electricity that meets your targets a few years down the road. So you're right, medium-term contracts that commit your producers or your generator to supply electricity at a particular price. It's called a capacity market. The Ontario government said in their budget last year that they're willing to look at it, willing to talk about it. So that's good news for maybe 5-10 years from now.
I always like to leave it on good news. Okay, Celine Back, the president of Analytica Advisors, in our studios in Ottawa. We're grateful that you could join us on TVO tonight. Thanks, Celine. And to Finn Poshman, the Vice President of Policy Analysis at the C.D. Howe Institute. Glad that you were able to join us in our Toronto studios tonight.
Great to see you, Steve.
Support Ontario's public television. Donate at tvo.org.